This video talks about the best ways to save money instead of in cash or bank's savings account. You will learn alternative options and why these options are better saving options than saving in cash. In times of uncertainty, people often believe that holding on to cash is the safest option. It feels secure, tangible, and readily available for emergencies. There's a natural comfort in knowing that money is within reach, untouched by the unpredictable swings of the stock market or the complexities of investments. But while this thinking seems logical on the surface, it can actually be quite risky in the long run. For instance, if you saved $5,000 in your savings bank account 10 years ago, there is no doubt that the money would have a high percentage of safety. But inflation is constantly at work, gradually eating away at the purchasing power of cash. The value of $5,000 10 years ago is not the same now as of today. $100 today won't buy as much in 10 years as it does now. Even in a bank account where it might seem safe, cash earns very little interest, often less than the rate of inflation, meaning that, over time, it is silently losing value. Many people don't realize how much of their wealth is being eroded until it's too late. Beyond inflation, economic downturns, policy shifts, and financial crises can further devalue cash. In extreme cases, governments have had to print more money, causing their currency to weaken and making savings worth even less. So, while cash may seem like a secure place to store wealth, it's actually one of the worst long-term options. The good news is that there are much safer alternatives, assets that not only protect money from losing value, but also allow it to grow. These assets offer stability, security, and in some cases, passive income that cash simply cannot provide. Here are the assets. Do you find this topic interesting? If you do, please click on the like and subscribe buttons on your screen. This action takes less than a second, and it will really help this channel. Thank you. Gold. Gold has been a symbol of wealth and security for thousands of years, and for good reason. Unlike paper currency, which governments can print in unlimited quantities, gold is a finite resource, giving it an inherent value that holds up even in times of economic crisis. Historically, whenever stock markets crash, inflation rises, or global tensions increase, gold becomes even more valuable as investors turn to it for safety. Central banks, institutional investors, and even individuals with a strong financial strategy keep gold as part of their portfolios for this reason. Unlike cash, which loses purchasing power over time, gold tends to retain and even increase in value. It serves as a hedge against inflation, ensuring that wealth is preserved across generations. While its price can fluctuate in the short term, history has proven that gold maintains its worth, making it one of the most reliable assets available. Other precious metals, such as silver and platinum, also provide a similar safeguard against economic instability. Treasury bonds. For those looking for an ultra-secure option backed by a government, U.S. Treasury bonds are among the safest investments in the world. When you purchase a Treasury bond, you're essentially lending money to the U.S. government, which guarantees to pay you back with interest. Unlike stocks, which can be volatile, Treasury bonds provide a predictable and stable return over time. They are particularly attractive during economic downturns when investors seek low-risk options. Since these bonds are backed by the federal government, the risk of losing money is virtually non-existent. Even during recessions, wars, or financial crises, the U.S. government has always honored its bond payments. Treasury bonds, bills, and notes allow investors to choose a time frame that suits their needs, offering flexibility while ensuring that money remains safe and continues to grow. In a world where market uncertainty is a constant reality, Treasury bonds provide a rare level of financial stability. Real estate. Real estate has long been one of the most effective ways to build and protect wealth. Unlike cash, which sits idle in a bank and diminishes in value due to inflation, real estate is a tangible asset that appreciates over time. Land, residential properties, and commercial buildings have historically gained value, often at a rate higher than inflation. Owning property not only preserves wealth, but also provides opportunities for passive income through rental earnings. This makes real estate a unique investment. It generates cash flow while also increasing in value. Even during economic downturns, people always need places to live and work, ensuring that real estate retains long-term demand. Some of the world's wealthiest individuals have built their fortunes through real estate, proving its reliability as an asset. While property values can fluctuate in the short term, over decades they tend to increase, offering a level of security and growth that cash simply cannot match. Dividends. For those who prefer an asset that offers both growth and passive income, blue chip stocks and dividend-paying companies are an excellent alternative. Unlike cash, which sits in a bank account doing nothing, stocks have the potential to increase in value significantly over time. Investing in well-established companies provides long-term financial security, as these businesses are less likely to suffer drastic losses. Dividend stocks add an additional layer of benefit by paying out portions of their profits to shareholders on a regular basis. This means that instead of simply holding on to cash and watching its value decrease, investors can receive steady income while also benefiting from stock price appreciation. While stock markets do have ups and downs, history has shown that quality companies with strong track records tend to grow in value over the long run, making them far more rewarding than keeping cash. Certificates of deposit. For those seeking a guaranteed return with minimal risk, certificates of deposit and fixed deposits provide a solid alternative. These financial instruments offer fixed interest rates over a predetermined period, ensuring that money grows without exposure to market volatility. Unlike stocks or real estate, which require active management and come with some level of risk, CDs and fixed deposits provide a set return with no surprises. Banks offer different time frames, allowing investors to choose the best option based on their financial goals. While they may not provide the same high returns as stocks or real estate, they outperform cash savings by ensuring that money earns interest rather than losing value to inflation. These deposits act as a safe, predictable way to grow wealth, especially for individuals who prioritize security over high-risk investments. Money market funds. Money market funds are another excellent alternative for those who want to keep their funds liquid while still earning returns. These funds invest in short-term, high-quality financial instruments, such as government securities and corporate debt, providing both stability and growth. Unlike traditional savings accounts, which offer minimal interest, money market funds provide higher returns while maintaining a low-risk profile. They are also highly accessible, meaning that investors can withdraw funds when needed without major penalties. This makes them ideal for emergency savings or short-term financial goals. For individuals who want to earn more than what a bank offers without exposing themselves to excessive risk, money market funds strike a balance between security and profitability. The idea of holding cash as a safety net is deeply ingrained in many people's financial thinking. But when examined closely, cash is far from the best option. Inflation weakens its value, and economic instability can make it even riskier to rely on. Instead of letting money slowly lose its worth, diversifying into assets like gold, treasury bonds, real estate, blue chip stocks, CDs, and money market funds provides a much stronger financial foundation. These alternatives not only protect wealth, but also allow it to grow, ensuring long-term financial security. While keeping some cash for emergencies is always wise, relying too heavily on it can be a costly mistake. By making informed financial choices today, individuals can safeguard their wealth, create new opportunities, and achieve greater financial freedom in the future. Instead of watching cash lose value over time, it's better to put money to work in assets that offer real security and growth. We have come to the end of this topic. Please share your thoughts and reactions with me in the comments section. Also, don't forget to subscribe to this channel for more interesting contents.